Relativity space has a huge, SpaceX is clearly just crushing on all cylinders. And they're really the only game in town with respect to launch capability. They have 3D printed everything. And the reason why 3D printing is interesting is you take so if you think a rocket costs $5 billion if built by NASA, Elon was able to take that to 100 to 500 million. And if you 3D print everything, you can take that cost to like 5 to 50 million. And so it allows you to just have this repeatability and manufacturability. Now, SpaceX also has a lot of 3D printed parts, but Relativity is entirely 3D printed. I think the goal for this year is to stay resilient and in the game.
In this highlight, Chamath Palihapitiya talks about Relativity, a company that he believes will rival SpaceX in the future. Relativity 3D prints everything, unlike SpaceX, which is a huge advantage. Make sure you stay until the end to find out Chamath's biggest business loser, biggest business deal, opinions on Starlink, his most contrarian belief of 2023, and his main goals for 2023. Now let's hear what Chamath Palihapitiya has to say.
Who do you have, Chamath, for your biggest business winner of 2023?
I'm going to pick something out of my portfolio. I think I'm the only non-trivially large investor in both SpaceX and Relativity space. Relativity space has a huge, SpaceX is clearly just crushing on all cylinders. And they're really the only game in town with respect to launch capability. And if you just Google it, you'll see that the Europeans, have a hit or miss capability on launch. The Russians are completely unable to do launch now because of all of these sanctions. The private companies in New Zealand or the United States have also had fits and starts, really incapable. Relativity, which is now the second most highly valued space business, is about to do a launch in the third week of January. And the big difference between it and SpaceX, which is sort of why we did it, this is a early YC company. I did the Series A and kind of went along the whole way. They have 3D printed everything. And the reason why 3D printing is interesting is you take so if you think a rocket costs $5 billion if built by NASA, Elon was able to take that to 100 to 500 million. And if you 3D print everything, you can take that cost to like 5 to 50 million. And so it allows you to just have this repeatability and manufacturability. Now, SpaceX also has a lot of 3D printed parts, but Relativity is entirely 3D printed. It has a launch in 3 weeks at Cape Canaveral, I think. And we have a $10 billion order book that gets unlocked. So I don't know how to see beyond a lot of these market forecasts right now. So I'd rather pick a company. I'll pick something in my portfolio. If the rocket does not blow up, there's a $10 billion order book, and this company is now on a trajectory to be as valued as SpaceX. And if it doesn't, it goes to zero. I think that the biggest potential business loser this year is Google search, as measured by pure profitability and engagement. I think it's easier for me to see where the usage comes from, because I think that with enough time and money, Oracle, Microsoft, Google, the Chinese internet companies can all compete, Facebook. And so I think that you'll converge on the same training, which will lead to the same inference. And so I think consumers end up getting confused and will end up being able to get high quality search results from many places versus today. You would only think that Google is the only game in town, quite honestly, for most people.
Well,
so I think that
the statistics show that. Yeah.
Google could lose 10 or 15% of usage to all these other sites. And that may not make any of those sites that relevant, but it'll have a material, measurable impact to Google and Google's bottom line.
Fantastic prediction. What do we think could be the biggest business deal?
Easy. This one is
okay,
easy.
Chamath, go. Let's go lightning round here. Go ahead, Chamath, quickly.
Starlink will go public. SpaceX will cut and paste the cap table, and we will take Yum. It'll be yummy and delicious. And my prediction is that the Starlink valuation will be at least half of SpaceX's current private market.
$75 billion. Just for Starlink.
$75 billion. It will be phenomenal. And I think the reason why is that I think in order for Elon to have complete financial flexibility and do what he needs to do, and he talked about this on our pod about the difficulties and the dangers of margin loans and all of that stuff.
Yes.
He's going to create breathing room for himself. This is the simplest and most obvious way for him to do it. It'll give him a ton of more dry powder. So I think that this is an obvious outcome in 2020.
They already have 1 million subscribers in their better than nothing beta, as they call it. I have 2 of them. I think this is a great prediction.
By the way, just so you know,
buses,
the best in class broadband connection for a plane is called Ka band, and it costs $500,000 a year.
That's ridiculous.
And you can replace it for, a tenth of the cost, and Starlink on a plane is dramatically better. So I think Starlink is going to go public, and I think it's going to be the best chance that we have of opening up the capital markets in 2023.
So this, Chamath, what's your most contrarian belief of 2023?
I will go and pick that inflation, which people expect to fall off a cliff, doesn't fall off a cliff as fast or as meaningfully as people want. And so I will explain inflation as 3 different chapters. And we've seen the first 2 chapters play out. So 2021, chapter 1, was all about energy inflation. And, we all talked about having almost $10 gas at the pump and what does it mean for everybody? And it caused that initial spike in inflation. And then we had it come off, and Sachs called this. He said, we're going to have this sort of double hump. And 2022 was really the story of goods inflation, right? All these prices and all of these things went up because the input costs went up, and we all had to bear the implications of that. But then that started to ebb. And now, if you looked at the tail end of 2022, what I found super interesting was the number of articles I saw about wage inflation. Whether that was Biden using an 1800s era law to prevent a railroad strike, the number of states that increased minimum wage, the trend around unionization. So in general, my thought is that the pendulum is swinging very markedly away from capital and towards labor. And as the labor participation rate stays low and continues to go down, and also it's compounded by an unemployment rate that may go up, right? It's going to be harder and harder to get people to do the work you need at the company you have unless you pay them more. I think that there's still a lot of uncertainty in the world and in the markets. And so I'm generally concerned that there's a lot of chop. And so I picked something that's pretty conservative, but I would have a combination of cash and the front end of the yield curve. So T-bills all the way up to 2-year bonds. So you can generate 4.5%, probably by the end of this year, 5%, pretty safely owning this stuff while you wait for things to become more certain. And the way that I think about it is that I would rather miss the first 10 or 15% of a rally once we're really done with this stuff than try to overcorrect and try to pick a bottom, just because I think that you could lose a lot of money. So I think the goal for this year is to stay resilient and in the game. And so having a bunch of cash on the sidelines ready to pound it in. Meanwhile, a portion of it, collecting 5%, is not such a bad thing while you wait for the bottom. I think that if we've learned anything from the last 3 years, you have to separate the valuation of a company and how it performs in the stock market with its value in society. So for example, if you look at Zoom's valuation has cratered, but its value in society has probably continued to go up. It's still a massively relied upon tool. The point is that markets do not give you credit for the value in society. They will give you credit when you are about to over-earn, but then they'll pull it all back when they think that you're going to under-earn. So in that lens, I think that tech will have a tough year. I think energy will have a really shit year. And probably the biggest asset class that is going to get pressured is going to be junk debt. And the reason is a bunch of these variable rate loans, when rates are at 5 and 6%, that all of a sudden are like 11, 12, 13, 14% coupons. A bunch of companies will have trouble meeting their debt obligations and will have to restructure the debt or will have to file. So I actually think this is a really good opportunity to pull back on so much waste. I haven't really looked at my household budget in probably 2 or 3 years. Didn't even bother.
Why?
And then when I looked at it, I was like, wow, this is really inflated to a level that I didn't expect. But it makes a lot of sense to live in a more heads down, austere way.
If you enjoyed that video, click here to watch Chamath Palihapitiya, a billionaire venture capitalist, reveal what unique features he screens for in businesses he's looking to invest.